Yeah, the good news, Steve, is that it's not inevitable. There are ways out. The bad news is that the people in charge, and we know who they are. It's not some deep, dark conspiracy. It's the Secretary of the Treasury, the Chairman of the Fed, the head of the IMF, Christine Lagarde, head of the European Central Bank. I mean, and others, Mark Carney, the super central banker. We know who they are, but they don't. They either don't get it or they're in favor of it. I can't come up with another explanation. The biggest thing driving the decline of the dollar right now, I'm not talking about foreign exchange rates per se, I'm just talking about the move away from the dollar as a store of value, as a reserve asset, as a global reserve currency, are these economic sanctions. And by the way, just as a quick aside, this may be on the brink of getting much, much worse, meaning destroying the attractiveness or value of the dollar almost overnight, because Mike Johnson, the Speaker of the House, and certainly the Senate, and all the people you mentioned, they're working on a plan. They're supposed to have answers by the end of February to seize the Russian assets. Now, the Russian assets, round numbers, about $300 billion. Russia had in the form of treasury notes and treasury securities in Western banks. Most of it's in Europe, some of it's in the United States. Most of it's in Europe in custody in Belgium, actually. Now, we froze it on day one. So as soon as the war in Ukraine started, we froze it. But when you freeze it, it still belongs to Russia. We didn't steal it. We just said, you can't get it. You can't sell it. You can't collect the interest. You can't use it. But it's still your money, but we're just going to freeze it until further notice. But what they're talking about now is seizing it, which is actually converting it to our use. And this is, again, about $300 billion, and using the money to pay for the war in Ukraine, because it looks like the Congress doesn't want to approve the $60 billion. We'll see how that plays out. Now, that is the reddest red line I can think of. You're actually stealing the money. I think that's exactly right. This goes back to what I said earlier, is others can't destroy the dollar, but we can do it to ourselves. We're the ones proposing this. Now, a couple of things. First of all, they're talking about late February because it's the second anniversary of the war, being whatever. But that is the timeline we're on right now. So a couple of things. Name one country in the world that would want to invest in U.S. Treasury securities if you witnessed the U.S. stealing $300 billion of U.S. Treasury securities from the Russians. Saudi Arabia, China, Taiwan, Japan, Korea. All these countries have, in some cases, upwards of $1 trillion to feed those out over time, not buy more, et cetera, because the U.S. has shown its willingness to just steal them. So again, we do it to ourselves. It's stupid. But beyond that, okay, the something about the White House, they can barely think one move ahead. They definitely cannot think two, let alone three moves ahead, which a good chess player can do. So what do you think Russia's going to do if they do this? Well, Russia will immediately seize all the assets of Western companies in Russia. Now, they have, imposed some counter sanctions and said you can't sell them right away, et cetera, but they haven't stolen them. And most of those assets actually belong to the Germans and the French, a little bit the UK, but mostly the Germans. So Germany's like, wait, but a lot of these Russian treasury securities are in custody in, as I said, Belgium's the main place, but some of them in Germany. But the point is, Germany's like, well, hold on a second. Yeah, I steal the Russian treasury securities. You, the United States, use the money to pay for the war, and then Russia seizes, industrial and commercial and energy assets from Moscow to Vladivostok, and that hurts me. So again, they haven't really thought through the ramifications. But the biggest ramification is the one I mentioned, which is everybody else says, I have no interest in treasury securities, because one day you don't like what I do. You don't like Saudi Arabia making up to Persia or to Iran, or China threatening Taiwan. So you seize my treasury securities. That's a red line they haven't crossed, and they're getting ready to cross it, and that'll accelerate the decline of the dollar very rapidly.
Yeah. We will cover this and make sure that Johnson's guys don't get out of control in this thing, because this will lead to a global economic war. Jim, tell us about strategic intelligence. I want to make sure the audience gets full access to your thinking, your writing, everything you've got at that in all your books.
Yeah, thank you. Strategic Intelligence is our flagship newsletter. We have a couple other publications that are a little more specialized, but it comes out once a month. A subscription for years, you get 12 issues, very modestly priced. We put more time and effort into that than anything else we do. I write about 5,000 words. which is chapter length. We have several other contributors, really good ones, Byron King and others, Dan Amos, who contribute to it as well. We cover mostly economics and markets. That's our job. But it used to be economics was one subject and politics was another. That's not true anymore. They're completely tied up. And we've been talking about it today, how the politicians in Congress are destroying the economy and destroying the dollar. So we turn to politics as well because we have to, because you can't understand the economic situation without the politics. So love writing it. I put a lot of effort into it. I get a lot of good feedback from subscribers. I was with my son-in-law the other day. We were changing a tire in a workshop in a garage, and some guy came up out of nowhere and shook my hand. He said, "Hey, I'm a subscriber. I love it." So we really. Yeah, Steve, I pride myself, and it's my job, on basically taking the most complicated concepts you can think of and putting them in plain English. And just to be clear, I do not dumb it down. I've never dumbed anything down, but I do write in plain English. And that, by the way, that's a skill in and of itself, because economists love, they love jargon and nominal wage rigidity. Well, it just means people don't like to take a pay cut. So why don't you just say people don't like to take a pay cut? Why do you have to use a phrase like nominal wage rigidity? And I don't. So we write in plain English. By the way, there are very few really advanced economic concepts that are actually that difficult to grasp. But it's like a priesthood. They would like to pretend that it is, and they use the jargon to kind of put up a front. But the truth is, it's not that complicated. Start with supply and demand, and get a few factors and go from there. So the answer is no. You don't need you don't need a college degree. You don't need a graduate degree. You don't need to understand all the jargon. If I use it, I explain it. I'll use a technical term, and then I'll explain it in plain English. So it's very accessible. But you get, airports, hotel lobbies, whatever. People come up and shake your hand, and I love it. I always spend time with anyone who expresses an interest. But the audience is diverse, and it's and the thing that I really, we sort of have a kind of 50 and older demographic, but a lot of younger people, a lot of people in their 20s are subscribers, and write to me and talk to me as well, because they've been they're smart. They're not uneducated, but they're miseducated. They've been taught a lot of stuff that just basically isn't true. We're now in the third generation of Americans who have no understanding of the gold standard. I run into people, they're smart people, and they go, "Oh, gee, I never knew we were on a gold standard." Yeah, our publisher, Paradigm Press, Paradig, and Paradigm Press, Strategic Intelligence. Just put that in any, search engine, Google, whatever. Our landing page will come up, and you'll see all the publications, and check them out. And the one that works for you, we love new subscribers, and we welcome those folks on board.